Hi everyone, it's Brandon from Bitvice. We got a special member today, Manus, who's an accountant, and he's been in Bitcoin for a while now. And today we really want to talk about Bitcoins for businesses or corporations. Basically, why would you even think of buying Bitcoin into your business, and all the planning, financial, and management aspects that go into it. So there's quite a lot to cover. Marnus, you want to give a quick intro to yourself?
How's it, guys? Like Brandon said, I'm an accountant by trade and been in Bitcoin for a little while now. As we're speaking, still trying to figure out accounting and tax for Bitcoin in South Africa. We're still moving down that road, but the research is proving insightful, and we're hoping that we can help you guys get Bitcoin into your businesses as well.
Also, thanks, Marnus. Ricky, you want to say anything?
How's it, guys? Glad to be here again. And yeah, I'm very much looking forward to this discussion. I think it's quite important also that we point out that Manus is part of the team at Bitvice, and that we've got specifically, have someone who understands the tax implications and how to handle it as an asset for tax reporting purposes. So something that's glossed over very often because people find it extremely boring, and they don't really want to think about that component. But as a business, you don't have that luxury, right? You have to, So yeah, the depth of the team we have at Bitvice is ever deepening, and we're very happy that Manus is there on our side. So yeah, let's take it away.
Awesome. So first thing we need to cover is why the hell would a business think of buying Bitcoin? There's obviously the number go up potential, and it's like we've talked about in the past, can go up to a couple $100,000 this bull market. But obviously there's the indirect aspects that we need to talk about, right? The horrible word inflation and other things. I don't know what you think, Ricky.
Yeah, man. I was just having a look at the South African Reserve Bank website, and currently, as it stands, they say as of February 2021, CPI is 2.9%. Now, if CPI is 2.9%, I'm going to eat my shoe, because there's no way that that's the consumer price inflation that we're experiencing. So I suppose what it comes down to is, how is CPI measured? And the notion that everyone experiences CPI equally is ridiculous. You and I, Brandon and Manus, all have different CPI measures. So how can you have one benchmark that applies to the entire country? Because people have different preferences, they buy different things. So yeah, CPI is, as we know, is completely underreported. But so if you're a business and you need to preserve your purchasing power, especially in South Africa, you've got to think of a number of things. One being, if you just store your value in the rand, you've got that aspect of the rand purchasing power depreciating against foreign currencies. But then you've also got the aspect of foreign currencies depreciating and losing their purchasing power, since everyone's printing at a rate of knots at the moment. So it becomes a very tricky thing, and this is why I think we've seen Bitcoin really gather so much steam from people putting it on, businesses putting it onto their balance sheets and investing into treasury. I mean, 2 years ago there was less than 1% of treasuries of Bitcoin held in corporate treasury. Now the number is over 8% already. So money is flowing in quickly, clearly, because corporations are realizing.
How long was that period you said?
I mean, I'm just thumb-sucking, but I think I don't recall 2 years ago in 2018 seeing any companies holding Bitcoin on their balance sheet, at least not any publicly traded companies in the US.
Neither.
There's probably a few private ones, but obviously they weren't reporting because they're not public companies, so they wouldn't report on that kind of thing. So the numbers, it's gone up massively, and it kind of every week now you see a new statement coming out. Oh, this company bought 10 million, this company bought 50 million. Tesla just sold some the other day. They sold 10% of their holdings, allegedly just to prove to their shareholders that it's a deep and liquid market.
Yeah, they needed to reach $1 billion revenue target or something, right, for the quarter.
Is that what it was for?
I think that was the reason. So they did buy $1 billion worth of Bitcoin a couple of months ago, and then they made a hefty return in such a short time.
Yeah, they more than doubled it, right?
Yeah, so they basically sold $100 million, added that to the revenue. And Elon, even on Twitter, was saying that was just to prove the point that how liquid this market is. And I think Elon took a lot of inspiration from the actual person we take inspiration from, which is Michael Saylor and Microstrategy, which was basically the first large corporation to put a massive amount of their treasuries basically all of it right now into Bitcoin. So he had a conference a couple of months ago with 7,000 businesses, mostly American, about how to place Bitcoin into your corporate reserves or whatever you call it. So there's not a lot of content or information on how to do that in South Africa. In America, they've really got things going there. So that's what we really want to talk about today. Other reasons why they would think Bitcoin. So we know inflation just steals your money away. So let's just say you're a business that's making a profit, which is probably far and few between in South Africa. So first of all, congratulations.
Now you got to keep it.
Yeah, you got to keep it. So, I think you probably made the decision that Bitcoin is going up. Do you even consider putting your business's money in Bitcoin? But what are other reasons?
Yeah, so besides the inflation thing, it's the financial repression aspect as well, right? Like if you're a business or it's a bit of a fringe case, I suppose, but it's becoming all too real in 2020, shown us anything, that you might be a business that gets shut down by the government because you're letting people into your shop without masks on, for example. Next minute the banks have shut down your bank accounts because they get an order from the government. This is not far-fetched to see this anymore. So maybe it is that you just want to preserve some of your purchasing power of your company in a self-custodial way, because if they shut down freeze your business accounts, your money's frozen, right? Because effectively banks are custodying your money for you. So it might be prudent to have a portion of your money in a self-custody venue, and the only real option you got at this point in time is Bitcoin or gold. And in South Africa, keeping your self-custodying your money in gold as a business is a very risky business, with the amount of crime that takes place. So yeah, it leaves you with a few options, and Bitcoin is a great one. I can think of a number of civic organizations in South Africa that are prime targets for financial repression by the government because they're doing things the government doesn't like and making them look bad. And I think those organizations would be very prudent to put a portion of their treasury in Bitcoin, because A, it's going to give them much more financial clout 5-10 years from now, and B, it's a way to stop them from being financially repressed. And you look at what happened to WikiLeaks. WikiLeaks had all of their bank accounts shut down, PayPal shut them down, Venmo, Visa, MasterCard. No one wanted to service WikiLeaks at the behest of the US government, and basically forced them into Bitcoin. And because of that, they made a 50,000% return on their investment. So they were like, thanks, US government. You guys have made us much more powerful because you cut us off from the banking system. So there's multitude of reasons. And everyone's got their own different threat model, and everyone's got their own different set of circumstances, ranging from, I just want to keep some of my money safe for inflation, to I want to keep operating in the most hostile environment possible. It's a wide range.
Yeah, I agree. Just then once again, like to harp on about the inflation point. We really crossed the Rubicon, all governments across the world, and they're going to continue to print relentlessly. And if you want to see all your earnings dwindle away, it's a scary thing to look at after you work so hard. So this is why it's really important to put across the point that businesses can buy Bitcoin. It is actually legal and it is possible. And what Ricky talked about now is that if you take self-custody of it as a business, you can do with it what you want. And we'll talk more about that point, because there are custodial services that can keep your Bitcoin for you in America. We don't know of any in South Africa. So that's why we'll talk more about the custodying part. Marnus, any points from you about why people, businesses should look at Bitcoin before we're moving on towards like the overall planning structure?
No, I think Ricky in his own way covered the points that I would have addressed, just as far as hedging against inflation and government overreach. So as a business owner or as a shareholder in a business, you constantly want to not just safeguard, but also maximize your funds. And Bitcoin ticks both those boxes very clearly, as discussed a little bit earlier. So I've got nothing further to there.
Awesome. Okay, so now you got to talk about the planning and strategy side. So the first thing is, what's the timeline? What's your timeline horizon, right? Because those have an effect on everything else. So what would you think would be someone's timeline or horizon in buying Bitcoin as a business?
Look, from my perspective, it probably just depends on how corporate your setup is and how big your business is and how many regulatory boxes you would have to tick in the process. Smaller businesses out there, owner-managed businesses, you can probably get this done in no time whatsoever. It just depends on whether you've gone through your own internal checks and balances. As far as bigger corporates are concerned, obviously there's a lot more to consider as far as investor relations and regulatory approvals and a lot of other things like that. So it's difficult to tell you exactly what a timeline should be. It's probably more to do with it should still be fairly easy to get it done and fairly quick to get it done in South Africa, even right now.
Okay, so let's talk about some of those checks and balances. So the first thing you talked about is obviously to get everybody on board. I mean, how far does that have to go?
Look, there's no regulation as far as any of this is concerned, as far as Bitcoin investment is concerned. But Bitcoin, we need to stress, is another investment. So you would have to go through the processes your business would have to go through with any other investment out there. Again, if it's an owner-managed business, you're probably looking at deciding tonight when you get home from work, I'd like to invest in Bitcoin. And as long as you're willing and capable of doing it, off you go. Bigger corporates out there may need to move some of these decisions to their boards of directors, to internal committees set up specifically for these purposes, like an investment committee, a risk committee. You might get your internal legal guys involved. You might have to get your internal auditors involved. Again, most of this is answered by how big is your corporation, and it would have to be determined by that.
So it's safe to say that the bigger your company is, the slower this process is going to be, right?
I think that's fairly safe to say. There's just a lot more corporate and legal things that you have to deal with. No, stop.
So say you're a sole prop or just a small trading business, and you were the entire shareholder. I mean, is there any external party you need authorization from?
No, not as far as I can think. You're buying an investment in your own name if you're a sole prop. That means getting a Bitcoin wallet and buying Bitcoin. So it's how long that takes.
So I mean, I've got a prime example of that. So as you guys can tell, I went for a haircut yesterday, and the barber I went to, we got chatting, and he mainly deals in cash. I got chatting to him about Bitcoin, and he's like, how his biggest worry with sitting on cash is that obviously inflation, right? How does he hedge himself against inflation? He's got to buy stock, and he sees that year on year is good cost of supplies goes up 15%. And if he's just dealing in cash, like he's constantly having to up his prices by more than 15% to catch up. So if he has to allocate a portion of his income or a portion of his treasury to Bitcoin, how would he go about doing that? And it's just easy for him to make the decision, right? My business is going to do this. But then practically speaking, the check or the mechanism he needs to put in place to ensure that it's safe, I would say for him, probably a multi-sig would be a 2 or 3 multi-sig is more than enough to secure his treasury. Essentially, he is the board of directors, so he can make all the calls, but it's just a security side, and he doesn't really need to bring other parties in that need to co-sign his transactions. So that's a really simple one. And I'm sure he'll be out competing all of the big barber chains if he just starts accumulating Bitcoin and they don't. But obviously, it gets far more complex the bigger your company gets.
Yeah, I mean, I think we'll get to the finance part, but that's the interesting thing we need to chat about is, let's just say you've got some reserves, right, in your business, and you want to change it to Bitcoin, and then you also start accepting Bitcoin as a medium. Obviously, you've got to separate those two, right? The income and your reserves. So we can talk about that in a bit. Okay, so then the next bit is also, it's a timeline about when you're thinking of selling that. Are you actually going to keep this forever, like Michael Saylor? Or do you plan on expanding the business in 6 to 8 months or 10 months? So those are things you also need to think about, because there are tax implications, and there will be certain, maybe if you're a big corporation, that's you need to go through certain protocols to get that signed off. I don't know, like any other things around planning going forward, Manus, that you need to think about?
I think just, let's focus on a bigger corporate, instead of just a sole proprietor who can just literally make the decision. So a big corporate would have to literally go and sit and discuss it internally, and define what it or why it is that they want to invest in Bitcoin. Basically checking that it still meets their investment strategy, their risk strategy, the overall appetite of the business. Then I think next step after you've got everyone on board is actually, as per usual, you need to put some people in places where they can make this happen. You need to figure out who's going to do what, as far as the project roadmap is concerned. Then it's all about who actually do you need to get involved, because it's not just the board of directors and it's not just the accountants. You need to get legal involved. There are contracts to consider. There are corporate governance issues to consider. You need to, again, get finance involved. We'll discuss shortly accounting and tax and those kind of things. You need to get IT involved, because your wallet is going to be talking to your systems at some stage and in some way. You need to make sure that the security is up to scratch.
Okay,
And then,
I mean, you've given the high levels and all this. I think let's talk point to point now, because maybe people actually want to hear about that. So let's start talking about the actual accounting, the tax, and the internal controls. Maybe let's focus on that, and then we can move to security after that.
All right. Cool. As far as accounting for Bitcoin is concerned, people out there may know that there aren't currently any dedicated accounting standards in place for cryptocurrency. So the best that people can do at this point in time is look at position papers that have been put out, as well as research papers that have been put out in this regard. So my own research, and that's based on a lot of available resources online, basically state that you need to account for Bitcoin in your balance sheet as an intangible asset. So in short, that's, sorry for the boring speak, that's in terms of IAS 38. You cannot account for it as a financial instrument. You cannot account for it as a cash or as a cash equivalent. And you cannot account for it as inventories unless you actually actively trade in it. So with accounting for it as an intangible asset, there's a lot of jumping around to do. It would appear as if the best way to deal with it is to use the revaluation model and not the cost model. Thereby, you are able to show increases and decreases in value as they occur, and at each period end, however you want to update your accounts with. As far as tax is concerned, it's a whole lot grayer at this stage, simply because no one's really come up with anything, again, as far as cryptos are concerned. So currently, any trade in cryptocurrencies, if they are held for investment purposes, will be liable for capital gains tax at the capital gains tax rate. So whether you're an individual or a corporate, the treatment as far as capital gains tax would differ between the two. But anytime you sell Bitcoin, triggers a capital gains tax event, and you would have to declare that, add it up, and when you do your annual return or your provisional returns, you would have to include this in your calculations for capital gains tax purposes. If you're an active trader, every time you sell Bitcoin, you would be taxed at your normal income tax rate.
So if you're a person and you're just buying and selling Bitcoin, not actively, you'd obviously get taxed at an individual capital gains rate. Would it be different for a business? Would they get taxed at a business rate?
Yes. So your capital gains tax inclusion rate is different for corporates than it is for individuals. So
what's the difference?
Depending, again, it's just the percentage of the capital gain that is included. it's as per normal and as is out there.
Okay. So, I mean, if you're a business, you actually, am I correct in saying you'd get a lesser rate?
Yeah, your capital gain after the inclusion rate is effectively taxed at the corporate income tax rate, whereas with an individual, it's put into, or it's included in your, it's taxed in your individual band that you find yourself in due to your other taxable income.
So if you're a high earning individual, you can end up paying more in capital gains tax than you would as a company. But if you're a low income earner, below 28%, which is the corporate tax rate, you'll end up paying less.
So if you're rich, just buy Bitcoin with your business.
Yes.
It's not financial advice.
That's definitely not financial advice.
Okay, cool. So like we said, I mean, the accounting software out there, we use something like Zero, right? It's quite hard to use Bitcoin as a denomination, right?
Yeah, it's currently not catered for in any of the accounting software out there. So you're stuck with converting to some sort of a fiat, whether it's ZAR in our case locally, or USD or GBP or Euro, whatever it is. With every single transaction that you do, you have to find other means of keeping track of your actual Bitcoin balance.
Okay. And then we need to talk about insurance. So, I mean, should a business, if they were to buy Bitcoin, insure it? Have you heard of any coverers in South Africa who would be willing to do that?
Own personal experience, no. Off the bat, I would have to do more research on that if there are any specialized providers out there. I know it's a product that is available, for example, in the States, because MicroStrategy deals with it quite profusely in their discussions. So it is a product that is available there, and I can't see it being too long before it becomes available here. It's another asset. It's an asset that has its own unique risks. It's not, as if your Bitcoin can burn, but you can lose your wallet. You can have bad actors involved in the process somewhere, and that means you would have to be able to insure against it.
I think personally that I agree. It's going to come, some kind of insurance product will come to Africa for this asset as it's past $1 trillion and becomes way more real to a lot more people over time. There'll probably be a custodial service, right? It'll be a specialized service that custodies that Bitcoin that you bought for you, and therefore that allows that certain insurance coverage.
You'll probably have your custodian already included in their fee, so insuring it on your behalf.
Mm-hmm. So we're primarily going to talk about security after this and self-custodying your Bitcoin, because right now that is to us the only way as a business. So, I mean, is insurance a prerequisite to buy Bitcoin for businesses? It's not like it stops you from buying Bitcoin, right? It's just something smart to do.
Look, it would depend on your risk management strategies and policies internally. So, if your business's policy is to insure all assets over X amount, then you would have to come up with something. But as far as just a normal investment is concerned, there's no prerequisite right now that forces you to take out insurance on it. No.
Okay, cool. And then let's talk about the reporting side of it. Like, what kind of reporting structures would you need to put in place? And let's talk more to like a corporation, because obviously there's investors who want to know what's going on and all that. How would you separate that? I know it's quite a technical detail. Maybe just cover the high levels.
Yeah, sorry to kind of repeat some of it, but it would depend on the size of your corporation, of your business, and its legal setup. Because again, sole proprietor, you're kind of reporting to yourself and to your funders out there, whether it's the bank or a lending house or someone like that. They might require you to give them more information on this asset, especially if you're using it as collateral somewhere. But that should be about it. You may have to report it to SARS on your personal statement of assets and liabilities. But there's no intricacies about that. Bigger corporates, obviously, if you want to invest over a certain amount, and if you're a publicly traded company or a public company with a large shareholder base, there are certain Companies Act requirements as far as informing shareholders is concerned, where you would have to tick a couple of boxes as far as your board of directors is concerned. Other than that, it's the disclosure in your financial statements. That's quite important. That's where the initial accounting for the investment as well as subsequent reporting of it becomes important. You have to classify it properly, you have to measure it properly, and you have to disclose all of your assumptions around those measurements properly as well.
Okay, cool. So we move on to the fun stuff, buying Bitcoin and managing
Let's
it.
do.
I don't know, Ricky, you have any more questions about that? Do you want to talk about buying?
No,
I
want to talk about the security aspect. Is the really interesting part to me. Is like how do you hold this asset?
Yeah, I mean, I think we need to talk about that first. We've got to set that up. You've got to set up your wallets and your structures before you can even buy it, right? Do you want to kick that off?
Yeah. So I think, look, if you're a corporate and you're going to be buying Bitcoin, you're going to be buying, let's say, a meaningful amount. You don't bother playing around with the hot wallets or hardware wallets or single hardware wallets. You've got to go multi-sig, bare minimum. And the real question is how many keys you want. The minimum you're going to start with is maybe a 2 of 2, which I wouldn't recommend. You probably go at least the 2 of 3, and then anyway up you can go up to like a 5 of 7 or a 7 of 9, or depending how many directors you have, right, and how much redundancy you want in your setup. So if, like in our example, there's 5 directors or 5 shareholders, you issue 5 hardware wallets, and you can have a 3 of 5 quorum on your hardware sig, on your multi-sig, where you've got 3 hardware wallets required to sign at any point in time to move the Bitcoin. You've got a redundancy of 2. So that way you can geographically distribute your risk. What that means is if someone had to do a $5 wrench attack, they come into your office with a gun and they hold up one of you and say, give me your hardware wallets, give me your Bitcoin. You can hand over that one hardware wallet. And because there's no more than one in one place at any time, they can't steal your Bitcoin. And this is where, if you have adequate security protocols in place, then insurance, your insurance premium, if you do get insurance, should come down drastically because you've got these protocols in place. Obviously, insurers are going to have to get smart and figure out how to price accordingly for this, and what the risk premium is. But yeah, there's definitely ways to secure your Bitcoin, and it's all centered around multi-sig.
So I mean, that's the whole point, right? Is to disperse the risk. And I mean, let's talk a bit to the smaller businesses. Just say it's one key person. What can they do? They can probably do a 2 or 3 multi-sig. And they could probably pass one of those keys to their accountant or their trusted advisor or whoever. And still that person, that third party, can't access the Bitcoin unless they get a second key. So you can still keep, the business owner, keep 2, but you can distribute some risk.
So like a great example would be like he keeps 1 with him on his person, or let's say himself. The second one he gives to his accountant, and the third key he keeps at a safety deposit box with the bank, for example. And then that way, the cool thing is you can always send Bitcoin in using, usually have the public key for your multi-sig wallet. So you can send Bitcoin in, but to move your Bitcoin out, you need to have at least 2 keys come together. So that the business owner can go to the bank, get his hardware wallet out of the safety deposit box. He brings his other one with, and he sits there in the bank, does his transaction, puts his hardware wallet back in the safety deposit box, and goes about his business after he's sent his Bitcoin where he needs to send it. So that way he doesn't ever have to involve his accountant in any of those transactions unless he loses his one that he has at his home, because the one in the bank should be safe, theoretically.
Yeah, so on those points, I think for a smaller business, it's probably prudent to use an out-of-the-box solution such as Casa. That costs about 2,000 Rand a year. And that's like setting up a 2 or 3 multi-sig key set. Then you speak to like the bigger businesses where you actually need to look at 5 keys in totality and say 3 out of them at least. That's where you need to look at more bespoke solutions. And luckily, there is open source solutions out there that do these key setups, but it gets quite technical. So that's where I would suggest, if you were interested in that, whoever's listening, maybe just contact us at connect@bitvice. And if you've got some questions, connect@bitvice.io, if you've got some questions around that, around setting that up and even buying Bitcoin, then definitely chat to us.
Yeah, so let's take that example, right? Like you've got let's say there's two business owners, you and your business partner. And maybe you don't want to use a 2 of 3 multi-sig. You might want to use something a bit more secure and go for like a 3 of 5 setup, for example, where you and your business partner each have a key, and then your third key, that's your quorum, the 3 keys you need to move it, is kept with once again, kept with your accountant, and the other 2 redundant keys are kept in safety deposit boxes, or they're kept, somewhere else that's safe, in a mutual safe you guys agree upon. So that's the kind of setup we could put in place for a small business that wants to set up their own multi-sig vault.
Yeah.
With like a bespoke setup.
Okay. I mean, there's other stuff around security now. So it's also around, making sure you do this anonymously. So if you were to say buy 3 hardware wallets to set up a 3 key set, or just one hardware wallet, say you're a sole prop and you just want a hardware wallet to keep your business's Bitcoin or your own Bitcoin. There's kind of OPSEC things you can do to make sure that people don't know that you've got Bitcoin. Like, first of all, when you order a hardware wallet, maybe don't give it your postal address box, right? Don't give your home address and things like that. A lot of people there was a big hack last year or earlier this year where numerous addresses were leaked and people have been harassed because people know that they have these hardware wallets. So that's the first thing.
Yeah, so sorry, on that point, Brandon, so this is what we call OPSEC, right? Operational security. So when you're ordering a hardware wallet, a really good idea is to have it sent to your place of work, so that even then, if the provider you purchased it from, like let's say Ledger, has a hack and they get compromised and all those mailing addresses get compromised, the attacker only knows your business address and not your home address. So that you don't dox yourself, basically.
Yeah.
And a great way to do it with Bitwise is you put in your financial advisor's address and have it sent to his house, and he brings the hardware wallet to you. So then at least you've just doxed him and not yourself.
That's good advice there.
Look, advisors have got to earn their fees, right?
Yeah, exactly. So I mean, we're talking about now that you've got your wallet, you set up an address to receive your Bitcoin. You haven't bought it yet. And I mean, it's not that difficult, right? It's not like you need some other company to pay them some ongoing fee to hold your Bitcoin for you. You just something like that, we could happily assist you with. So you got that up now. So now it's about buying Bitcoin. Manus, is there any things around before they should buy Bitcoin that they should note? Well, obviously, they need to understand that they're going to buy at a certain price to keep control of that, to understand capital gains down the line. But anything else you can think of?
No, I think we've chatted about time horizons, considerations around when you're going to need access to this reserve, whether you are simply holding it for the short term as a short-term treasury, or whether you're properly hodling like a Michael Saylor and holding it, until the end of Earth. Those types of things will have an impact. But other than that, nothing comes to mind.
Cool. So,
Brandon, we've said this has been raised twice now. Can we maybe just unpack it a bit? Why Michael Saylor says he's going to hold until the end of time? Like, how does that how does that work? Like, what's the point? Then if you're going to hold it, if you're never going to sell it, then you've just basically tied your money up.
Look, I think I'll be telling my children that every night. But please do elaborate.
Yeah. So the point that Saylor is getting to is that he sees that Bitcoin as a pristine asset with pristine collateral that you can use to raise loans against, right? You can put it up as collateral and access liquidity in dollars or rands or whatever market you're in. And these markets already exist. They're much more developed in the US, but they are coming to South Africa. There are decentralized platforms doing it already, where you don't have to sell your Bitcoin, and hence you don't incur a capital gains tax event because you haven't disposed of the asset. You're just using it as collateral for a loan, and then you pay off the loan, you get your Bitcoin back. And in the interim, Bitcoin has gone up, so effectively you're inflating your loan away. So in that regard, why would you sell your Bitcoin if you can do that? And it just becomes a game of who can hang on to the most sats for the longest. He wins, basically, because you can access more and more liquidity. And this is what rich people have been doing for years. Instead of instead of selling a property that they own, they just refinance it. And as the property value keeps going up, the debt kind of inflates itself away. And that way you don't ever have to dispose of your asset, you still get access to liquidity.
Exactly. I mean, the only way I see inflation stopping, or like just stopping Bitcoin's enormous trajectory, is if governments will go back to the gold standard, which is it's impossible now, right? If they were to do that,
you mean if they become responsible?
Yeah, the whole system would implode.
Yeah,
I mean, all the debt in the world right now, you know, the gold is $10 trillion or $11 trillion. The amount of debt in the world is, I don't know, it must be above 200 trillion.
Yeah.
How are
the
you
price
supposed
of gold would go through the roof, obviously. It would go to
exactly
100,000.
And how are you supposed to support or balance those two things? It's impossible now. So they can't do that. So the next step is like, sorry, and then the next step is, can they make a better Bitcoin?
No.
First of all, you got to remember the network effect. You know, Bitcoin is 10 years or 12 years ahead of anything that's better, and people could say Ethereum and all that crap, but it's way ahead. And it's not just 10 years, but it's an exponential advancement. It's at an exponential advantage above the rest. We mustn't dive too deep into that, because it's not like, you know, we can talk about that forever. No, another discussion.
Yeah.
So that's the second one. And third one is, you know, a lot of people haven't talked about the impact of the upcoming like central bank digital currencies and changing the money, and the World Economic Forum talking about the new, what do they call it?
Great Reset.
Yeah. Okay, whatever that
back
means.
better.
The Great Reset. Just put a blindfold over your eyes and good luck. That's basically their message.
Yeah. Get in the pod, eat the bugs. Plug into the matrix.
Yeah.
Oh my goodness.
Nothing changes in that system. It's just an advancement. Yeah. It's a technological advancement in the distribution of money to people. That's all it is. So it just means getting credit out quicker and more accurately, which only just carries on with the inflation. That's what it is.
Kicks the can down the road again, and it disintermediates the banks. So they just take another layer out. But ultimately, it's still going to implode. They've just taken commercial. If they do that, they bypass commercial banks, because now their function is no longer valid, which is really as a gatekeeper for vetting who gets credit and who doesn't. And if central banks can directly liaise with their customers, which are not citizens, by issuing CBDCs to them directly, then the commercial banks are, you know, no longer useful. But that obviously comes with its own suite of massive issues, which is basically a Leviathan surveillance state that keeps track of your every transaction, and you have no financial privacy anymore. It's not really a world I want to live in.
Yeah.
But it's coming, folks, and Bitcoin is kind of the bulwark against that, and thank God for Bitcoin, really.
Amen. So going back to buying Bitcoin. So we would obviously, as Bitvice, you could buy Bitcoin through us, and we send it directly to a wallet you set up, and we can assist you setting up that wallet. You can also buy Bitcoin on exchanges. There's numerous big exchanges in South Africa. You can send your money there, change it to Bitcoin. They charge you pretty hefty fees, and they charge you withdrawal fees. Just remember that. And you can get your Bitcoin out there, or you can do peer-to-peer exchanges. I wouldn't advise doing that unless you know what you're doing and you're pretty experienced. There's a lot of scams out there, and it doesn't mean that the platforms are scams. It means that the counterparty is good at scamming. You've got to always remember that. And now you got your Bitcoin, you got your, let's just say, your wallet or your multi-sig wallet, and you got it there. So going forward, you just need to report that in a due diligent manner to whoever you need to report to. And what about selling Bitcoin, Manus? You want to just talk about now you're a year down the road and you've made some money, you want to sell Bitcoin?
Well, I think importantly, like we mentioned earlier, it's going to trigger a capital gains tax event. And it would probably be prudent, this is not advice, it would be prudent for the person or the institution selling their Bitcoin to have kept track of each individual Bitcoin purchasing transaction they have made because of that price fluctuation that everyone knows about, you want to make sure that in the event of selling some of those Bitcoin, you choose to sell out of the batch or the purchase that you paid the most for, during your purchase history, and that you still have available on hand, so that you can minimize that capital gain, thus, paying less to SARS, but still paying them what they do. So the record keeping of your Bitcoin purchases would definitely be beneficial in this instance. Treat it like, every Bitcoin purchase is a different house. When you sell a house, pick one that has the lowest capital gain. Bad example, but you understand what I mean.
Yeah.
Yes. So coin control is super important. Yeah.
Well, batch control more than coin control. You need to know which batches you're selling from, so that you can choose the most tax optimized solution.
So Ricky, can you talk more about coin control? So there actually, there's actual functionality available in Bitcoin to control that, right?
Yeah. So basically, it's just so you can, every time you purchase Bitcoin, you get what's called UTXO, unspent transaction output. So that is a batch of information that's contained there, and that was purchased at a certain price, and obviously it gets disposed of at a certain price. So that way, you don't just have a pot of all of your Bitcoins sitting together. It's actually made up just like coins, all together in a pot that make up your total. But each one has got information associated with it. So like Mana says, you can have a, last in, first out type of policy where the coins that you purchase the most expensive rates, you can then dispose of first, so your capital gain is smallest. Because if you sold a coin that you bought at 100,000 Rand and it's now a million Rand, you've got a 900,000 Rand gain you've got to account for. So the CGT, and that's going to be huge. Whereas if you bought a coin for 900,000 Rand, you want to dispose of it at a million, it's only 100,000 Rand. So keeping track of that is quite important. How do you keep track of that? This is why you need to make use of certain desktop wallet software pieces that, like Blue Wallet's a great one. You can track all of that. Green Wallet does a similar thing. And it means that you can accurately track what coins are what, so that you can, I suppose, be as efficient as possible with your taxes.
Yeah. So if the nice thing about our platform, so if you buy a Bitcoin through us, you do show for every order that you make the Rand rate that you bought at per Bitcoin. So now that gives you a base to work out your capital gains in the future. And then
with your transaction ID as well. So you can link it to that UTXO set.
So that's what I was going to say. Yeah. So we send every time that order is completed, there's an email with a transaction ID, and that just shows a certain, input and output, as Ricky was talking about earlier. So, I mean, that's the beauty of Bitcoin. It is and always has been a beautiful, transparent ledger that you can see all the way back in time to the Genesis block, which is that first block. So it's not hard to report and account for all these things. It's really not. It's been
all the information's there.
Yeah, it's been a breeze for me over the last few years. As soon as I just started Bitcoin and got out of shitcoins, now that it's my life's way more simpler.
Accounting for shitcoins and airdrops and that stuff becomes a nightmare.
No, terrible.
And now you've got just Bitcoin alone, you've got one coin to worry about. Complicated enough. Imagine if you're holding like 100 coins in your portfolio, your corporate treasury portfolio. And it's gonna be a nightmare. You're gonna need a full-time team of accountants just to report to SARS. It's definitely not worth it. How big does your portfolio have to be in order to cover those costs?
Yeah. So Manus, I'd say you're a business and you want to capitalize and you want to buy, I don't know, a new tractor for your business, and you use some of your Bitcoin to buy that. That still triggers capital gains, right?
It does. The moment you liquidate that Bitcoin into whatever fiat currency to buy your tractor, it will trigger a capital gains tax event. And you would have to treat it as you would any other capital gain. So that is still the shortcoming that we're seeing even on an international scale as far as authorities dealing with Bitcoin is concerned. There's no clear policy direction at this stage that would make this administratively make more sense, because right now you are just liquidating an asset in order to buy another asset, yet you end up paying capital gains tax on the Bitcoin sell, and hopefully maybe your tractor appreciates in value, you end up paying capital gains tax on that side when you sell that one day. But it should, once Bitcoin moves to currency type status, so a cash or a cash equivalent type status, hopefully this will have been sorted out. Otherwise, you know what, keeping track of all of this is going to flood tax authorities with transactions.
So that's why we were talking about earlier, you know, if you're a business and you have your reserves in Bitcoin, that's quite easy to keep track of. But not just say you also want to earn, you want to, you know, accept Bitcoin as a method of payment for any goods or services you sell. It'd probably be prudent, first of all, to accept that income Bitcoin into another wallet, separate from your reserves, first of all, because that's treated differently in terms of tax, right?
Yeah, well, if it's a normal revenue transaction, it would be taxed at your normal. It would be treated as a normal revenue item. It's just a matter of you're going to recognize your revenue at the converted fiat rate. So, you know, whatever the Bitcoin's R rate is, or you're going to convert your BTC received at that rate. You're going to account for it at that rate. And like you say, you're going to put it in your reserve wallet or your reserve wallet 01 or whatever it's going to be. And in order to minimize ongoing transaction costs, you would probably empty that wallet into your reserve wallet as and when required.
Yeah, the last thing you want to do is put up your public key for your treasury wallets and have people pay directly to that, because that means anyone who's paid you can then look straight into your wallet and see what your balance is, and then they know where you work, they know who you are, they know how much Bitcoin you have. They're going to come with a $5 wrench. Actually, no, inflation has made wrenches way more than $5 now, but they're going to come with a $10 wrench and come and get you and take your Bitcoin. So very bad practice to do that.
Cool.
Yeah.
I mean, those are all the questions I could think of what people would ask. But I mean, people are also welcome to post comments on the YouTube link or just pop us an email at connect@bitvice.io. I don't know, Ricky or Minus, do you have anything to close in?
I think from my side, just one last thing we didn't really touch on, but also as far as taxes are concerned, is the VAT implications. If you thought that income tax and capital gains tax was convoluted at this stage, VAT is even more so, especially seeing as you want to eventually, well, you should eventually pay SARS what is due to them, you know, when you're registered for VAT every 2 months or every other month. And just in order for you to actually generate or convert sufficient Bitcoin into cash to enable you to pay SARS will in fact generate a capital gains tax event when you liquidate your Bitcoin, just in order for you to pay VAT, which is also going to SARS. So yeah, it shows exactly how muddy the waters are right now. And it hopefully underlines the need for speedy resolution as far as what are we actually supposed to do with this asset.
But so, Manus, from what you're saying is the incentives then basically are all aligned for you to hodl your Bitcoin as long as possible, not dispose of any, and use it as collateral to take out loans if you do need to access any capital against your Bitcoin.
If that is your risk management strategy, then yes, by all means. It would make sense.
Because it gets around all of the headache of CGT and VAT and, you know, all of that.
Yes. If you hold, you won't pay CGT unless you sell one day. But unfortunately, and even as we've realized, you do need cash. So that's a little intricacy that we are still investigating, and we'll probably be able to provide more feedback later on.
Yeah. And then Brandon, just on a point that you raised earlier, so with the government that simplifies the tax code regarding Bitcoin the soonest, there's a direct incentive for companies to go and set up in those jurisdictions and then capitalize in those jurisdictions. Because like you say, you have to have cash flow. You're running a business, right? You've got to dispose of the asset at some point, or some of the asset. So let's say Portugal, for example, says, okay, anyone bringing their Bitcoin in here and you dispose of it to buy another asset, there's no CGT. It automatically creates a massive incentive for businesses to come to Portugal and to dispose of their Bitcoin there and then recapitalize in other assets in Portugal. So there's a massive game theoretical advantage there for jurisdictions that are Bitcoin friendly, because why would I want to dispose of Bitcoin in, let's take France, for example, or Spain, across the border, when I can go into Portugal, set up a shop there, set up a business there, sell my Bitcoin there, and then not have to deal with the nightmare of paying CGT and then buying another asset.
Definitely.
Doesn't make any sense.
No, that's
So the game theory there is going to be super interesting.
I agree. Well, gents, thanks so much for your time. It's been a great chat. I hope this helps a lot of people. And once again, anybody wants some questions answered, please contact us at connect@bitvice.io. We'll happily get back to you. Marnus,
Yeah, and
thanks for your time.
If you're a big civic organization that has over 250,000 rate-paying members every month that wishes to get into Bitcoin and help fix potholes and fix South Africa, please reach out to us. We're more than happy. Yeah.
Awesome, guys.
Nice.
Thanks a lot. Have a good evening.
Cool.
Cheers, guys. Bye.